Hi guys, so if you do SIPs on regular basis, there are three problems that you will face. Number one problem is that you will not know when to exit or sell your SIPs. This is a genuine problem. Let me know if I'm making this up or do you genuinely believe this. Second key problem is that you will pay a lot of commissions along the way. Whenever you're doing SIP, you will do it through like HDFC, AMC or whichever company that you're using. They will charge commissions, right? So over a long term, this adds up quite significantly. How much? I'll show you the math. Third key problem is that SIP as an industry has picked up quite aggressively, and this is creating a bubble. For example, roughly 26,000 crore of SIP money comes into the Indian stock markets every single month. Now see, if the companies are growing really fast, this is not an issue because the earnings of the company will grow, and fine, you're buying something at a slightly more overvalued premium. Cool, not an issue. But in case there's an earnings slowdown, this SIP bubble is going to pop, right? So these three problems are there. Now, these are the points that I have covered on some of my past videos. People have got really pissed off कि भाई ऐसा आपने बोल कैसे दिया SIP के खिलाफ, right? हिम्मत कैसे हुई? Do you have a better solution? So I'm going to explain you my solutions. Now this might not be applicable to you. I don't know. Like take whatever good comes out of this short conversation. You can, even if you can understand 2-3 points, apply it to your portfolio, then why not, right? So just see it with that lens. This is not the viewpoint in the market. This is one of the many viewpoints in the market. Listen to other people, whatever they are saying, whatever God has given you a brain, think logically, whatever appeals to you, end up doing it. Okay. So let's begin, and I will talk in a more solutions oriented manner. And let me start by revealing my performance. Okay, so I have started two funds. One is a bulk fund and one is a smart SIP kind of a fund. Okay, how much commissions do I pay? 0%. I don't pay any commissions on it because I myself am managing it. So the commissions paid are zero. Let me just quickly talk about the performance, right? So for example, and some of you would say that, hey, this is a made up data, this, that stuff. Hey, there are thousands of students. They will verify. If I am bullshitting in public, right, people will just crush me, right? It does not make sense that I'll make these type of claims, show you my entire portfolio, and it doesn't turn out to be true. So this is not made up data. There is like human evidence to back it up, right? So a lot of people will comment, right? So, okay, so let's begin. So see, this was the fund that I started in the month of January, right? And I had been showing it on and off, right? And I had invested roughly 765 and I had come out with the announcement that I'm going to invest $1 million. And right now the value of this fund is 870,000. The unrealized profits are roughly 13.5%. And realized profit means that I have done profit booking, right? So I have booked some profits on it. And these are some of my cash positions, which I put it in a high yields instrument or high savings instrument. And that is what I'm doing on this portfolio. Now, as far as the portfolio performance goes, I started investing in this bulk fund when the market was at an all-time high in January, right? And since then, NASDAQ is the benchmark that we are trying to beat. NASDAQ is like roughly minus 2%, right? And we are right now roughly 13.66% here. This is actual booked profits and we have some cash running. So the alpha on this portfolio is easily around 20%. That's what I would say. Now, when I made this revelation that, okay, I'm running such a fund, many people say that, you know what, you got lucky that you were able to buy a lot of stuff in April. See guys, I'm not the only lucky person out there. The market correction happened for everyone. People who showed the guts to put a significant chunk of their portfolio. For example, I had come out with the data point that, hey, $1 million is my fund. This is what I'm going to run. And in April itself, I put maybe like $500,000, right, in that portfolio. Now, this is not a boasting video that, hey, I made like so much return or that much return. That's not the idea. I want to do something interesting with you. I want to actually tell you some key points or some key things that I've learned by running this particular fund and juxtapose it or compare it to the fund 2 that I have started very recently in June. So let me just quickly comment on that fund and I'll come back to the performance. So this is the fund 2 that I'm running and this is a SIP fund. So I started this in starting of June, right? So starting of June. So this is very, very recent and it is on an unrealized profits of roughly 3.5-4%. I have not booked any profits, but this is like literally days, right? So this is like 1.5 weeks or something, right? So we can't judge the performance, but what I want to do is that I want to help you understand the difference as to why I am building two different type of funds and the application for that for you, right? So for example, I would highly encourage you that in your portfolio building journey, you should create two types of funds and maybe track it differently or use like two different trading accounts, however you want to structure it. Do that because this is very important and I'll help you understand the funda behind it. Okay, so the type of two funds that you should be building is, the first should be a bulk fund, right? Bulk fund. And second should be an SIP fund. Now, I am not a believer in SIPs, right? I don't do SIPs. If I were to put majority of my wealth, I will put it on this fund, right? And this is what I had been doing it up until this point. But people ask me that, you know what, we face a genuine problem that you are doing bulk investing, you have the money, all this stuff, but we don't have the money. We get like monthly salary every month and we have to figure out a way to invest it. So there I am calling this a smart SIP fund, right? Now, let me help you quickly understand that when you are creating your own structures or own funds, which I highly encourage you to do it, you should, number one, set a benchmark, right? So benchmark. So for example, for me, the benchmark here is NASDAQ, that if I'm performing better than the benchmark, which is the NASDAQ composite, then this fund is doing exceptionally well. So honestly, like, I mean, at this stage, so I have beaten NASDAQ comprehensively. But that's not the point. See, what you need to understand is that once you have beaten NASDAQ or any benchmark that you are doing, can you take profits off the table? That's again a very important point, which SIP doers miss. What would end up happening is that, see, you will continue to put like money, whether the market is going up, down, and there can be periods of like, 5-year consolidation where you have not made any money in the market despite doing regular SIPs. Now that is time loss for you. Now this is something that people do not really understand, because they only understand losses when there is a loss of capital. But there are two types of losses in the market. One is called as the time loss and the second is called as principal loss. Okay. So for example, if you invest 100 rupees and that 100 rupee becomes 80. So this is where people will panic. But people will not panic much that if they put 100 rupees and it stays like 101 rupees after 3 years, right? They will not really be bothered with this. But honestly, the way markets are being designed now, this is a very important problem for you to solve. And hopefully by sharing some insights on this video, you might be able to mitigate this. Really depends on how much you wish to learn after this. But I'm just sharing like my rough thoughts on the entire topic. Okay. So number one thing is that you need to build a benchmark, right? That what benchmark you're following here. Here I am following S&P 500, right? So this is the benchmark that I want to beat, right? Second key point is that when do you take money off, right? This is a very important point because this is what converts into realized P&L, and this is a very important indicator. Because right now I am bragging everywhere that, you know what, मैंने NASDAQ beat कर दिया, this, that stuff. What if in the next 1 year, NASDAQ turns into minus 20%? Now all this gain will be wiped out, right? And if I do not have any additional cash positions, then I can't go and invest in NASDAQ when it falls by 20%. This is very important, and 3 points that I will tell you. Number one, whenever you are building your portfolio, whether it's a bulk portfolio or an SIP portfolio, very important that you set a benchmark. You should compare your performance of that particular segment with that benchmark. Number two, you must have a profit takeout strategy. And number three, you must have a cash bucket. Now, what is the meaning of cash bucket? For example, this is a bulk fund. Here you can clearly see cash bucket. Now, let me take you to my fund 2, which is a smart SIP fund. And let me just quickly show you what this is about. So for example, here I have written all the notes regarding fund 2, that, okay, this is the intended amount I'll build. Now I'll say that, you know, Akshat, $1.8 million capital is a lot of capital. See, boss, I mean, you're not competing against me, right? You are competing against yourself for your wealth growth. So what you do is that, for example, if let's say that you are investing 1 lakh, right? Or 1.8 lakh, then you just mirror this, right? So that's the idea that I'm just giving you, that, okay, this is something that you can just move up and down in capital. But even you would have a very clear idea that, boss, my salary is like, you know what, 2 lakh a month. I'm saving 1 lakh. So I have an idea that over the next 18 months, I might be able to save 18 lakhs. So that's the money that I'll bring. So then you need to design your SIP portfolio. Now here, just quickly helping you understand what is the meaning of cash strategy. For example, here, you would see that on a monthly basis, my target amount comes out to be 100,000 US dollars. This is what I will be investing. But I have only invested 85.476 thousand US dollars as of today, which means that I'm sitting on roughly 15% cash, which I can invest as of today. Now, this is very important, and I had summarized 3 points. One is that you need to set a benchmark. Number 2, you need to have a profit takeout strategy. And number 3, you need to have some cash positions. This is very, very important. And you need to set this as per your standards. For example, my grandmother, she was very keen only on doing FDs, right? So her benchmark was what? Her benchmark was risk-free benchmark, that she wants to make risk-free money. Nothing wrong, right? 100% right, okay? Your wish, whether you want to beat inflation, not beat inflation, your call, whatever gives you happiness. But you can't be setting wrong benchmarks. For example, if you're investing your money in FDs and expecting that I'll beat NASDAQ, that's madness, okay? That will not happen. If you're investing your money in FDs and you are assuming that, you know what, I'll plan my retirement after 50 years and all that stuff, not going to happen. In FDs, your money will be eaten away. Now, that does not mean that you don't keep any FDs. FDs are very good because they are from cash position perspective. That is your opportunity money. That when the NASDAQ falls by 20%, what am I going to do on my bulk fund? Well, I'm going to bring in this additional capital, right? Which you can see here, a part of it into that fund, right? So when the market again corrects, right? So that's my idea of running a bulk fund. So then comes the next pillar or next point that, okay, Akshat, you spoke about the fact that have a bulk fund and have an SIP fund, do both. But you are primarily doing bulk, okay? But you are encouraging others to do SIP. Why? Because I had already spoken about that problem. But a more realistic way, because you might not be able to do bulk all the time, because to doing bulk, you require money. But if you are doing SIP, then I would still encourage you to have like a smaller bulk fund, right? It's okay, right? I mean, for example, let's say that you are running a 1 lakh SIP. Now, what you can do is that you can cut this 1 lakh rupee into two halves. One is that you'll say that, see, 30% money I will use for bulks. 50% money I'll use for SIPs. And rest 20% money I'll make a call, right? Whether to invest it or not, or sit on cash. So this is the fourth key point that I'll leave you with, that you have to do this basic portfolio structuring that make a very clear idea that, see, whatever you are finding right now to be at a bulk buying price, you can go and buy it. If you find something which is worth SIP doing, then you go and do SIP in it. If you're not finding any opportunities, just sit on cash because opportunities will come. Now let me start stating some very specific examples of how I have managed this portfolio or how I am managing this portfolio. What is it that I'm planning on doing next? So, okay, so 3-4 key points, and hopefully all these things that I have taught so far, it will come together. Okay, so let's take a look at some opportunities here, and I'm just explaining it more from a learning point of view. So don't copy it, right? Because you have to constantly update your investment thesis. But let me pick a concrete example of a company called as IEX. Now, this is one of the leading energy players. It's a wide moat company. Wide moat means that its competitive advantage can be protected. Now, unfortunately, India is a deeply corrupt market. If tomorrow some regulatory change comes to favor some other big player, now this company can go to zero, right? Like any other company. So as a rule, never invest more than 5% of your money in any stock. Okay. So for example, if I show you my portfolio here, you will see that the allocation of my portfolio is not more than 5%. You'll say, yeah, Microsoft, because I made like 21% profits on Microsoft, therefore it has slightly gone up. But otherwise, my percentage allocation on portfolio wise is never 5% or more on any single stock, right? Generally speaking, it can go on and off sometimes, right? That market rises, so 5 ka 6.5, 7 ho gaya wali cheez. But generally it will not be more than 5, okay? So I hope that this first point is clear, that even on a company like IEX, don't keep more than 5% of your capital. Now, study the stock fundamentally. You will realize that, you know what, IEX, solid business in the long frame or on a longer duration time. What is going to happen is that energy requirement is going to go up because artificial intelligence, machine learning, semiconductors, data centers. What is the underlying layer? Well, it is energy, right? You need energy, and India is an energy deficit country. One could argue that US is a energy surplus country, but even they are struggling in terms of maintaining that AI revolution because of the fact that the energy or computational requirement will go like crazy. So companies like IEX are great long-term plays, right? Now, if some company is a great long-term play, it becomes a great option for you to SIP. Okay, so this becomes a great SIP. Okay, second, you need to study the nature of the stock. For example, if you study IEX, what you will realize is that, see, so okay, so here is the long frame, right? So this is how it is behaving, right? So on a longer frame, if you take a look at it, and I've marked the levels, and this is what my target price comes out to be on a long frame. Okay, so long frame means that if you're holding the stock between like 2 to 5 years, this is our target which is likely to get achieved. So technicals wise, it is fine, right? And fundamental wise, it looks strong. So does this become a good SIP candidate for now? The answer is yes, right? That this becomes a good SIP candidate, right? Now, what is the meaning of SIP? That, for example, my fund was, or my funda was that on my SIP portfolio, I am going to invest 100,000 US dollars. Now, if I were to pick something like IEX, what is the maximum exposure I'll take on monthly basis, 5%. So $5,000 is what I'm going to put for this month on IEX. So this is what the decision I could do in order to do a SIP. So then comes the next question that, okay, this is about SIP, but what about bulk? See, bulk depends, number one, on the market conditions more, right? And if you're doing bulk, then primarily do it on indices, at least at the starting. Now, what do I mean by that? So for example, for this, let me show you IT index. Now here is IT index. And what you will realize is that if you actually study IT index, right, it is consolidating at its 4-year point, right? So for example, the price of IT index is here. 4 years ago, it was again here, right? So in the last 4 years, honestly, if you would have done SIP, you would have not made any money. Okay, so this is point, right, to be noted. And now, indices, I would highly encourage you to go with bucket one, right? Bucket one means bulk, right? So if you're doing bulk, then IT में आप एक bulk कर दो. For example, if you buy it here, now technically on a short frame, it looks bad because this channel might be followed, right? Something like this. But in case there is a breakout, right, then you make a lot of money on this bulk. So here, what I would typically do is that I'll build like whatever positions I want to build on IT index, I'll build 33% of it, 40% of it. And again, for example, then it falls here, right? From 0.1 to 0.2. Here, I will do like another bulk of 33%, right? And if there is a breakdown, then at this point, I'll do like the third bulk, right? And then I will just sit and wait, right? And my sector exposure will not be more than 20% of my India's portfolio. So this is an important point that you must understand. So I hope that through this short conversation, you got an understanding that when should you be doing SIP on what type of assets, and if you're doing bulk, then what type of assets you should look. So I hope that I'm able to convey that point. Now, what benefit does this bring for you? Well, it solves one of the key problems that you're facing on SIP, which is exiting. Okay, because see, if you understand valuations at the time of entering, right, from a long frame, short frame perspective, you would understand undervaluation also, fair valuation also, and overvaluation also. So right now, what you're trying to do is that, for example, we had a conversation on IT index. Now this looks undervalued, right? And now you will study the fundamentals that, okay, you know what, आगे चल के बढ़ी जाएगा IT and all that, because data center and all that is picking up and IT needs to be a glue. And here you need to do more research, more analysis. For example, up until 6 months ago, I was bearish on IT. It's not as if that I'm super bullish on IT on a long frame basis, right? But there are certain key developments that have happened in the technology domain, right? In the sense, for example, I live in Middle East, right? And one of the key things that has happened or is happening in the world is that both US and China are trying to sell their tech stacks to different countries. For example, US has been able to successfully sell its tech stack to the Middle East. For example, Nvidia. It's a part of US's tech stack. If Nvidia does not sell it in the Middle East, then China will sell it in the Middle East. Okay. So to prevent that, what happened? Well, Donald Trump came, he met the different rulers in the Middle East. And then finally, decision was made that, okay, Middle Eastern countries are primarily going to buy their tech stack in artificial intelligence, machine learning, data centers, all that from the US. Otherwise, this business would have gone to China. Now, what do you think is going to happen in India also? Something similar. And who do you think is going to lead that? Now, whenever these type of tech stacks are sold, it's not as if that we are 100% importing it. Maybe like 10-15% business growth will come from these type of companies. Now, these are all approximations. I cannot write it on a stamp paper and give it to you. I'm just being honest. Whatever you take out of this conversation, take it out, right? And accordingly structure it. You must learn how to fundamentally analyze it. So this was the fundamental part of it. There are much more nuanced views, but I'm just helping you understand what's the latest development that is happening. So that's one. Now you start seeing this fundamental concept in alignment with the current valuation. So valuation wise, if you analyze, you'll see that, you know what, okay, 4 years it has been in like a valuation time correction zone, right? So 4 years, nothing returns. Okay. Now, which means that, hey, it is actually preparing for a breakout, right? Now, this might happen when maybe next year after that, but expecting like 10% growth rate on something like IT, where 4 years have been stopped, this looks okay, right? It does not look super risky. Therefore, we are doing bulk, right? Now, I hope that I'm able to help you understand this. Okay, so we started the video discussing 3 problems that when you do SIPs, you are facing 3 problems. Number 1 is that you don't know when to sell. Now, if you are structuring your portfolio into 2, one is a bulk portfolio, one is an SIP portfolio, then maybe you don't need to sell your SIP portfolio, but you will clearly be able to see कि यार, you know what, जो आपने bulk कर रखी हैं चीजें, you will be able to exit those positions very beautifully. Okay. Why? Because for example, when IT goes all-time high, then maybe you can reduce 20% of your positions. That translates into real profit. So again, highlighting this $1 million portfolio, see, I am booking real profits. I'm not just sitting doing nothing, right? So this is very important for you to understand that from time to time, you have to book profits. This is what the meaning of profit booking is. Second is that how much commissions do you pay? The answer is absolutely zero when you're applying this strategy. And how much money does this save for you? So I always love to run this math. Let's see, at least 1% commission mutual fund people take, right? Be it in the form of entry load, exit load, or whatever, like, maintenance charge or whatever it is. If you're playing this game for 40 years of SIP, right? And also mutual funds do not necessarily make more returns than the benchmark, what we said. So, okay, so 25,000 SIP, you will end up with 24.5 CR. But if you change 1% for commissions, then you are left with 18.5 CR. Now this on a base of 18.5. So if you actually look at how much portfolio value you lost, right? So on a base, so 6 crore ke aspas on a base of 18. So you lost roughly 30% or 33% of your portfolio value. Okay, so that's how much the impact of commissions are. There is a reason why this portfolios that I'm generating, right? Both this portfolio 1, portfolio 2 will build generational wealth for me. Why? Because I'm not paying any commissions on it. Why? Because I took the pain to learn all these different things. It's your call whether you want to learn, not learn, completely your choice. What I will leave you with is that at least start. Keep your money into 3 buckets. One is that some opportunities where you can bulk, some opportunities where you can do monthly SIP. If the market looks a little bit bloated, save some money, right? Do not put the entire 100% of your SIP money onto either of these funds. I hope that this was useful. In case you feel that you can benefit from my commentary, then I'm putting the links to track both these portfolios. These are on paid basis, of course. I teach you how to manage and build your own portfolio, primarily in the US market. That is where I'm putting a lot of money. I'm putting in a lot of time in terms of researching. So in case you like, you can definitely follow along. I am leaving the links in the description comment. Thank you so much for watching, and I'll see you soon.